here's what we're going to talk about. What I want to have a conversation on, we're going to have a conversation about reaccumulation, traditional Wyckoff reaccumulation. Let us look. There are several schematics. Now, what I want you guys to take away from this entire conversation is that Wyckovian reaccumulation is not about, let's say, building a metallic little cookie cutter mold that you can then like hold out, kind of arm stretch. And anytime you see it in the charts, you could be like, oh, hey, this cookie cutter mold is exactly that thing. And therefore it's going to be, you know, easy long. Or at the same time, I don't want you to be like, you know what, that kind of looks like accumulation in this mold, but the last 2/3 are wrong, or maybe the last third of it is wrong. It doesn't match exactly. So I'm going to ignore it. Like, these are things I don't want to happen because this is in violation of how reaccumulation works. What I want you guys to take away is just the basic principles. Okay. What is support? What is resistance? What is price doing at each level? Where is it spending more of its time? Is it in the upper third or the lower third? And what you'll learn is that if you can nail down, let's say you know, when it comes to redistribution or distribution or whatever, if you can nail down one direction, let's say the upward direction, where you're like, I know what accumulation looks like true bottom accumulation with the sign of strength, and, you know, even with the spring, if you can figure all that out, you can right click on the chart and invert it. And suddenly that's almost exactly distribution. If you can figure out one of the directions, let's say the upward direction, you can actually just kind of apply that same mentality. If you invert the chart, it almost works exactly the same way. So while we are only going to be talking about reaccumulation, understand that the exact opposite is true. The inverse is true. So we're talking about reaccumulation. A lot of these concepts will work for redistribution, the opposite side. So we'll get to that later. Let's focus for now on this chart we have right in front of us in the middle of the screen, Wyckoff reaccumulation schematic. Now, what's happening here? Okay, so we have an upward trend that turns into a trade range. Now, we can identify the trade range from a number of things. Number one, there's some consolidation at first, then a breakup and a reaction. Okay, so we have a upward break, a sell-off, and this sell-off comes back to where this consolidation took place, and then it continued up. So right here, like right off the rip, we have a point of interest 1 for the lows for support, a point of interest 1 for resistance, right? Because this is right where the sell-off takes place. Now we have the bulls stepping in. So this is a point of interest 2 for support. And then ultimately this sells off again, which is a point of interest 2 for resistance. So using, like, you can find yourself right here. Like, imagine you just woke up one day and you're right here. Using the data you had prior, like previously, you can extend this to the right, and all of a sudden you have a trade range. You just extend it out, and now you have support, resistance. You know what the market's doing. Now, here's the thing. At this first little portion, you'll notice that the majority of time, the price is spent in the upper third and tries to break out but can't do it. But then what you'll also notice is that as time goes on, now focus on the green, so not the price that's in the black kind of color, but the green color. Now you'll notice that as time goes on, it actually spends more time at the lows and in the lower third than it ever did in the upper port. So this will fake a lot of people out. They're like, oh, this is distribution. This is easy distribution because we're about to break down. You know, that's a UTAD. This is when people have their mind in kind of Wyckoff world. That's what they do. They immediately are going to jump the gun and, oh, that's a UTAD. This is distribution. We're going down. But if time goes on, this is why one of my favorite things to do is just to tell people, just slow down. If you're confused by the market, if you're not sure what's going on, the only thing you can give the chart, I guess the better way to say it is, the only thing you can allow the chart to give you is time, is data, it's information. So if all you had done is sit on your hands for about another 30 days before you took a move, let's say, instead of entering that big sweaty short, you just wait. Because remember, distribution is not confirmed until it breaks below the trade range lows. Okay, so the guys identifying this as distribution would have been wrong because it's not confirmed until it breaks down. Lo and behold, it goes on to accumulate at these lows. And said another way, every time price tries to break down and break below support, what does it do? it consolidates, consolidates, and ultimately now we have this nice downtrend. And there's what's called a creek jump, or jump across the creek. These are the couple different ways of doing it. The trade range at first, price spends the majority of the time at the highs, fake people out, make them think that this is distribution. However, price does not break down below the lows, and ultimately it consolidates to the lows and sends it. Okay. And by sending it, it goes from the trade range lows to above the trade range where it consolidates and likely continues on. So this is just one explanation. Let's look at another. Here's another one. I like this one. The reason I like this one is because this particular schematic, while it seems very basic and, I don't know, elementary, it also does not have a big blow off top. See, a lot of these schematics will have this big fake out, and you actually don't see this. More times than not, I will not see this little thing. So I don't like trying to calculate my brain into looking for that. Instead, this is what I see more times than not. Basically equal highs, maybe a fake out double top, but then lots of touches to the lows. And what's more, and what I didn't mention earlier, is true Wyckoff reaccumulation will oftentimes spend a lot of time in these ranges, and a lot of time could mean 6 months to a year, maybe even more. So these are very interesting things you tend to see in the like as you zoom out, you go to daily candles, weekly candles, that kind of thing. Here's another one. I know it's really hard to see. Let me see if I can zoom in on. Yeah, there we go. But it's essentially the same thing we saw here, only with the spring. So if you're familiar with my style of trading, I'm always talking about a trade range being formed and then what happens after there's a violation of the trade range. So whether it breaks down and then comes back, this is your entry right in here, because it's a pretty easy move to go from one end at least to the other, and then bonus points to a breakout. That's fine, but the trade, at least the first trade, is the visit from here to here. And if this was inverted, it'd be the same thing. So just like whenever you look at this kind of chart, you have the price come back into the range. You'd enter your short basically from in this area and look to take profit somewhere at the trade range lows. But it's the same idea for this. Now this particular schematic is essentially like accumulation while a trend is already present. So it's broken up, it's consolidated, and now it broke the lows, returned into the trade range, and sent it. And here's another view. It's essentially the same thing. You have a trade range formed, lots of time spent in the range, but in all cases, there's a failure to break down and consolidate below the lows. Like this is a hallmark kind of textbook thing to look for. Price does not break below the lows and consolidate in any of these examples, despite all of them. The spring was the closest thing you got to it, but ultimately this was like the rubber band slingshot maneuver for this thing to go vertical. And you'll see that a lot of times as well. Personally, I prefer to take a trade when a spring has been present. I won't always get it, but those are my favorite setups. So now, why are we talking about this? Why am I leading off with this? Jack, don't you always start with Bitcoin? I do, but Bitcoin is just kind of boring sideways. So I thought I'd spice it up a little bit and go over a active trade setup for this reaccumulation. Everything we just went over. Let's look at it live. It's BNB on the Bitcoin pair. Now, this is a schematic. This is a trend that has started back in January of 2021. Nice uptrend, and since then has spent 480 days. 480 days in a trade range, effectively going sideways. Now, if you know me, and a lot of you do, and I appreciate you guys coming back, multiple times a week. I love you all, and you know that. One of the things that stands out to me, and one of the things that I point out all the time is, if we're in a bear market like we are, why do we even, what's the point of looking at alts? Unless you're trying to play some kind of mean reversion and you use alts as like a beta, like a multiple to whatever move Bitcoin's about to pull. Let's say you expect Bitcoin to pull 5%. Well, maybe Sol will do 10 or 20, you know what I mean? And that's fine, like if that's how you're looking at it. But this is a different animal, and I want to make that real clear right off the bat. This setup is its own animal, and it cannot be ignored. There's only two ways that this plays out. There's two, like we are limited to two options. Option A is a big sweaty continuation, just like what's in this. Option B is this is actually part of a larger distribution and this thing breaks down. So the reason this is important to talk about right now at this moment is because where we, like, our make or break line is literally right here. We're within, if you were looking for a trade or a trade setup or whatever, we're within 6% of where a really half decent stop would be. Now, I say that with like kind of holding my breath because we've already seen that this market is no stranger to faking everybody out. So even if you set your stops, like the textbook stop would be somewhere below this level, you know, call it like 0.012 or something like that, like right in there. However, I say that kind of tongue in cheek because we've seen one, two, three fake outs before the actual move. You know, are we going to see 3 fake outs again before another move? I don't know, right? This is, I can't predict the future. I don't have a crystal ball, and I recognize that kind of thing. All I can say is that this setup is the best setup I've seen on any coin, anywhere, on anything, Bitcoin included, in probably 6 months. Because the strength of this after spending 480 days consolidating, jumping the first creek, followed by multiple fakeouts on the heels of really nice consolidation, and then with a breakout, a nice change of character. That's what COC is. This is a change of character followed by a break of the highs. You can see that we have every test of the highs was a take profit, a sell signal, whatever. So we have 2 creek jumps followed by a breakout, and boys and girls, this is what you want. This is it. So let's kind of what if it. What might be going on here? Why might we see? Can we add conflicts, right? This is another thing I'm a big fan of. You never just take a trade to take a trade, right? Especially if you're looking at big money, which is what I'm actually considering with this setup. What you do is you say, okay, I need more than just like the chart looks good. What is the bigger picture? And there's some people in chat kind of asking about that, like, well, what's the strategy? Why would this happen? You know, that kind of thing. Well, let's back it up and let's go back. And I've shown this a couple streams ago, but let's show it again, just so that, especially if I put this on YouTube, I want to make this real clear why I'm even looking at this to begin with. And the punchline is because if we go back to Bitcoin from December 17 to March 2019. Okay, so let's look at this. We have BNB on the Bitcoin pair on the top. That's what's up here. BNB on the Bitcoin pair. Down here's Bitcoin on the dollar. And I've lined up the same like time frames. I just kind of want to show you what happened in those time frames. So from the time that Bitcoin peaked, this was, quote, the top. Okay, you can see that was actually the start of BNB on the Bitcoin pair. That was the very beginning of it. So there was a nice uptrend, there was some consolidation, and then ultimately there was like a final uptrend in the last little part of this. Now this second leg to the upside coincided with Bitcoin's final flush, final breakdown. It was kind of the last portion of the bear market. Ultimately, this led to the bear market lows. It's been about 120 days at that point. Around the time that the Bitcoin bear market bottom was actually in, what you can see is that the BNB Bitcoin pair stopped being the good trade. Okay, so at the bear market lows, whenever that time comes, whenever we can look at the Bitcoin chart and with very little doubt, with a high percentage amount of confidence, whenever we can look at Bitcoin USD and be like, this looks like the bottom. Like, I think either the bottom is behind us or we're really close to it. You know, you never really know in the moment. Everybody kind of tries to act like a superstar in hindsight, right? But when you're actually right in these candles right here and you're living in them, you don't really know. You just kind of hope. So what we're going to be looking for is 2 different things. One, a sign of BNB on the Bitcoin pair having some sort of top. You can see there was this broadening wedge that ultimately was a cycle top. We've looked at several broadening wedges through the streams. This is a great example of it acting as a market top, like building on the charts, acting as a top. We never see that schematic as a top, or at least not often. So if you were a big brain, let's say you knew this was going to happen and you wanted to figure out the best way to trade this, let me break it down for you real simple. You ride Bitcoin to its all-time high. You sell every Bitcoin you have into BNB on the Bitcoin pair. You leave it. You do nothing else. And at the bear market bottom, you rotate all your BNB back into Bitcoin. And that's it. Now, let's say you did that. Let's say all you had was 1 Bitcoin. Okay, and let's say that you did that. I did not do that. I'm not trying to pretend like I did. I don't even know anybody who did that, but I'm just reading at the charts. Historically speaking, that would have been your highest percentage win trade, right? I think we can all agree on that. With like kind of high time frame, I'm sure you could chop your way to $1 gazillion, sure, right? But realistically, looking at kind of high time frames here, that was the best setup. Now, let's say you actually did that. Let's say you sold everything, you know, right in. Let's say you put your 1 Bitcoin into BNB and then later sold it back. Your 1 Bitcoin is now worth 12 and a half Bitcoin. Now let's also look, because I kind of feel like we're somewhere in, you know, let's call it this little start of this final leg. I don't think Bitcoin's too far away from its bear market bottom. I don't think we're there yet. So let's just kind of what if our way into, let's say we're right in here. So if that's the case, and let's say you put only, I see the chat making fun of me. Let's say you only put your 1 Bitcoin in right here. Well, by the time you traded it back into, you know, you turned your Bitcoin into BNB and then you changed it back. Well, at the end of this, you would have actually turned your 1 into 2.5, or your percent gain would have been 250%. So very, very, very interesting. And I don't think it's something we should, you know, ignore or sneeze at. This was the last bear market. This is 2018 into 2019 bear market. We see how it behaved. You know, if you were like Gigabrain and you somehow got in at the Pico lows and then sold the Pico highs, you turned 1 Bitcoin into 25 Bitcoin. So that got my attention. That's why I was even looking at this chart to begin with early on. And now let's bring it to present. Let's look at where we are now and look at this trade range. And again, this is worth a discussion, worth consideration. Again, this is not financial advice, so I'm only sharing with you the same information that I use when I make my own trades. I just think this is the best setup I've seen across the board for anything. I'm not trying to be perma bulljack, perma bearjack, just charts jack. Just whatever the charts are telling you, that is all I'm good for. That's all I'm here for, and nothing else. I'm not your hype man. You know, I'm not your bear guy telling you to sell.